Morningstar has initiated coverage of Sweden's largest defense contractor, Saab, and I've got Morningstar's equity analyst, Loredana, here with me today to hear more about her thoughts on the stock, what made her allocate a wide moat rating, and what investors should look out for in the future. Thank you for joining us today, Loredana. Let's start with a fair value estimate. You've set a fair value estimate on Saab stock at 860 kronor. What lies behind this valuation?
Hi, Anna. Our fair value of 860 SEK is backed by higher defense spending, as well as margin expansion due to a shift in product mix towards the dynamics and surveillance system, which have higher margin and are more cash generative. Moreover, we have the majority of the programs that are shifting from development phase to production phase. So Saab derives the majority of its revenues in Europe, and we see many opportunities here, starting with, of course, Sweden. In Sweden, Saab is the biggest defense contractor, and the country has pledged around 300 billion SEK for defense spending between 2023 and 2025, and we expect Saab to be able to capture around 60% of it. Moreover, the company is an international leader in anti-tank weapons, in radars, in electronic warfare. So we think it is very strongly positioned to gain from the raise in demand due to the Russia-Ukraine war. And this is not only a short-term gain, we see it as also a long-term opportunity, as European countries will have to replenish their stocks on this platform thereafter. Moreover, Germany is another very important opportunity in Europe. Germany is set to become the third largest defense spender globally in 2025. And Saab is very strong there in electronic warfare and surveillance for the Navy. But also currently it has received the role to upgrade the electronic warfare system for Germany's Eurofighter aircrafts. And finally, if we move outside of Europe and we look at US, Saab is starting the delivery of the T-7A, which is a training fighter jet that is developing with Boeing. So there are exciting opportunities, and these are the main reasons why that are backing our 860 fair value.
Okay, and you've also allocated Saab Morningstar's highest moat rating. What made you give Saab a wide moat?
Yeah, when we consider the moat for Saab and we assign a wide moat, we consider the technological requirements, the switching cost, and regulatory barriers that are present in defense. Saab derives 95% of its revenue in defense. And while competition for a bid among incumbent players is very intense, once a company wins a successful military program, then it guarantees a long stream of revenue with high switching costs. The switching costs are so high because of the contract in defense. Defense contracts usually start as cost-plus contracts in which the military assumes the risk of any cost overruns during the initial phase of the program and only shift into fixed-price contracts once the platform goes into production. So once the risk of the platform is lower. So switching costs for the military are, given the capital that they've invested, the time that they've invested, very high to move to another contractor once the program is up and running. Moreover, if we look at Saab record high backlog of 126 billion SEK, that only provides us with a glimpse of Saab future potential. And that's because the majority of the platform that we have there have long development phase cycles, long production cycles, and high aftermarket opportunities. Development cycles, they go from 2 years to multi-decades, and we believe that platforms with higher development, longer development cycle, like fighter jets, submarines, they warrant a stronger moat because of higher switching costs. So it's easier for the military to work with the current contractor in solving any issue than switching to another contractor and starting a development phase from scratch. Regarding production cycle, when a company wins a platform that has long production cycle, then basically it has the monopoly on that program for the entire life of the program. And that's because there is no viable substitution. So again, high switching cost. And in Saab, we have platforms like fighter jets, submarines, naval vessel, which go between more than 30 years of production cycle. And finally, if we look at the platforms the Saab has, the majority of them have aftermarket framework contracts that go between 4 years to 10 years. Aftermarket framework are very important because they generate a recurring and safe stream of revenues with high margin. So they increase the earning quality of the company.
Okay, so you mentioned switching costs there. Can you give us some insights into Saab's biggest competitors and where you see Saab in that mix?
Yes. So if we look at Europe, then we can mention wide mode BAE, wide mode Thales, and wide mode Dassault. If we look at US, then we have General Dynamics, Boeing, Lockheed Martin. Now, Saab strategy has been focusing on avoiding to go in direct competition with its bigger competitors, while building expertise, focusing on niche market, and then leveraging this expertise to create partnership and joint venture with its competitors. Example of this is the one that we have already mentioned, the T-7A that is doing in collaboration with Boeing. And the T-7A has been selected as the main training fighter jet for the US Army, so a very important opportunity. In missiles also, it has important partnership with the MBDA, DL Defense, Boeing, and also has recently won a partnership with BAE. Saab has been selected to upgrade the electronic warfare for BAE CV-90 vehicle. So we see this strategy that Saab has implemented as very successful, as it allowed the company to expand outside of Sweden while sharing the risk of the programs with its competitors and leveraging their presence in other countries.
Okay, so looking ahead then, what do you think investors should keep an eye out for?
We expect in the short term and the midterm for growth to be still driven by the ground combat platform, especially missiles, and that's due to the high depletion rate that we are seeing in the Russia-Ukraine war, as well as the current supply and demand imbalance. We see in a very positive way the fact that Sweden has recently entered the NATO, and we believe the Saab position will be reinforced, especially in the Nordic and in the Baltic Sea regions. And that's because NATO countries prefer to get procurement from other NATO countries. And we're already seeing actually this trend with Saab being recently included as one of the contenders to upgrade Netherlands submarines.
Thank you so much, Loredana, for talking Saab with us here today. And until next time, I'm Joanna England for Morningstar.